Hi, everyone. I'm Ken Rakowski. Welcome to our regular Future Blockchain Summit virtual space where we hang out and talk about what's going to be discussed in the October event. We're very excited about our in-person October event. Yes, we are still doing an event because Dubai has successfully proven that in-person events can take place in this new normal. I think this is an interesting time, and Nisha, I'm very excited about where things are going. Nisha, how did it go? Because I know that you guys did a big event 2 weeks ago in Dubai. It came off to be incredibly successful, right?
Yeah, absolutely. I think it was so critical for the industry to get kickstarted and have face-to-face events again, because it just makes all the difference to be able to connect face-to-face and to hear speakers speak as well face-to-face. So 2 weeks ago, we held our Dubai Restarts AI Everything event. And it was an invite-only event that had over 1,000 people in attendance. We had a lot of measures that were taken to ensure that there was social distancing, there was sanitization. We had a small exhibition area as well to showcase what an exhibition will look like. Maybe we can flash a couple slides up that will show what that will look like. But yeah, it's kind of like, you know, when you go into a mall, it shows the maximum number of people that can be in a store. So we had that at exhibition booths, which showed how many people could be at the exhibition booths. And the conference area was completely social distance. It was really fascinating. And I think it's really kicked off the season for us now, because we're seeing a lot of things now moving as a result of that.
Well, I realize that even at a global level, you guys were highlighted for being the first to move in this direction. Now, it's not just for the attendees making it very safe. You've made it extremely safe for the speakers and the panelists too. And that was another precaution you guys had to take, correct?
Absolutely. So basically what we did is there was a set of tables and chairs that were for each set of panelists, and they had to be removed with each cycle. And so we had a group of people standing there kind of waiting for a panel to finish. And as soon as that session was done, there was a new set of tables and chairs that were put on. And so that also let us understand what the flow of movement of people and panelists.
And this helps out because, Oscar, you have a big event coming up next year, but the first part of next year, right?
Yeah, exactly. In March 27th, we're launching Fintech Surge. Nisha is also involved with that. And there's a big crossover with Future Blockchain Summit as well, where we have a lot of finance discussions.
Yeah, it sounds like what you guys are doing. And here's some imagery. Why don't you tell us what we're seeing, Nisha?
So this is the conference area. And this shows you normally when you go to an event, everyone's together, there's groups of people together, right? Or there's tables. So here you can see everything is socially distanced. There's 1.5 square meters around each seating area. As I told you, the stage itself as well was socially distanced, and there were a lot of sanitization measures taken. The microphones have sanitized kind of packs. So these are the chairs that you're seeing. They all have coating that I believe for 30 days it's antiviral and so on. So lots of interesting stuff. Masks on all the time. We had will.i.am stream in live as well virtually, which this was interesting because we saw it's actually possible to have a live, quite high profile panel. This is the Minister of Artificial Intelligence for the UAE, and that's obviously will.i.am, and they were having kind of a live session and a live conversation. It worked beautifully. So it shows that, you know what, if there's certain people from certain countries who are not able to travel, we can still beam them in live and it has a huge impact.
So you did a hybrid. This is a complete hybrid from what people saw on the conference side. Now the exhibits were different. You allowed people to still interact with the vendors at the exhibits, right?
Correct. So again, you probably can't see it in pictures here, but we had the maximum number of people that can be at a particular stand at a given time. They were a lot more spaced out, but you know what? I think, and this is where we kind of need to reassess how we think about events. In the past, it was how packed is an event? Could you get into a conference room or not? Whereas now it is, we need everything to be socially distanced. So it was interesting to see people adjust and rethink of what is a successful event as well.
So what happens if I know the person? Let's just say I go with my significant other or partner to an event. Are we able to sit together, or are you still social distancing everybody?
So if you're in the conference room, you have to social distance. So you can see the chairs are out, you have to social distance. If you're walking on an aisle and kind of entering the area or going into the exhibition area, you can be next to each other. But if you're sitting in the conference room, it has to be social distance.
Okay, so let's change a word right now. Let's get rid of the word social. We're physically distancing. We're not social distancing because we're being social now and we're social there. We're creating physical distance and that's it, not social, right?
Absolutely, it makes sense. It's a good new term coining.
Yeah, let's use it. Let's use physical distancing. And I think this is probably a great point where we should start today's incredible event. What do you think?
Sounds good.
Let's get it going.
Get the countdown.
So let's get that
started.
countdown.
Good afternoon, ladies and gentlemen. My name is Oscar Wendell, and on behalf of Dubai World Trade Center, welcome to today's webinar, The Race to Evolve Funding, Fintech and Blockchain Transforming the Landscape. This webinar is a joint collaboration between Fintech Surge and the Future Blockchain Summit. Fintech Surge is our new conference and exhibition happening next year on March 27th to March the 30th, live at Dubai World Trade Center. And as you know, my colleague Nisha Ramasetti, show director for the world's largest blockchain festival, the Future Blockchain Summit. Nisha, what's going to happen next October?
Thank you, Oscar. Thank you. Yeah, as you all likely know, the Future Blockchain Summit is taking place live in person from the 27th to the 20th of October at DWTC, and it's co-hosted with our partners, Smart Dubai. We were just talking about it now, but for those of you who've just joined in, 2 weeks ago, we hosted Dubai's and probably one of the world's first in-person events, the Everything Dubai Restarts Conference. I'm pleased to say it was an absolute roaring success, and we took all necessary precautions that were required. It was so critical for the industry because we know how important face-to-face interactions are, and now we know that events are possible as long as we take the necessary precautions. Today's session is particularly exciting because we're diving into the grassroots of what drives a booming economy, funding for SMEs. The important distinction is that today we're touching specifically on alternative funding models that leverage fintech and blockchain technology. For example, crowdfunding and security token offerings. We're excited to bring our panel to you today, which consists of founders and CEOs of some of the smartest companies helping SMEs get alternative funding. Before we kick off the show, for those of you who've attended our previous digital keynotes, you know that they're incredibly interactive. So do make sure you're asking our speakers the hard questions. They will aim to answer as many live during the session or by typing out answer in the question and answer section. Questions need to be asked in the Q&A button in the panel that you see below on their Zoom bar. If you have a question for a specific panelist, please mention who it's for. You can also upvote questions for a higher chance of voting. Chat functionality is open and live for you to chat amongst yourselves, but make sure you're asking questions in the Q&A section. We have polls running every 10 minutes. This makes it very fast-paced and interactive, so make sure you answer these as quick as possible because we close them and then we post the results within 30 seconds of the poll being launched. Great, well that's it from us at Dubai World Trade Center. I'm pleased to hand you back over to Ken Rutkowski, a great friend, award-winning radio host, and a well-known figure in the tech industry. Over to you, Ken.
Thanks, Nisha. Hi, I'm Ken Rutkowski. I'm coming to you from Los Angeles, California. Now, remember, the whole idea of the Future Blockchain Summit is it's a total global event. So when we're all meeting together in Dubai, it's from around the world. So like I said, I'm in Los Angeles, and I believe, Peter, where are you located, Peter?
I'm in Dubai.
You're in Dubai. Okay, so you're in the hot area of the world, literally the hot spot, because what's going on with blockchain, you guys are leading the way. Now, you're focusing on this thing called P2P, peer-to-peer lending. Explain exactly what Beehive is doing.
So thanks again. So basically, Beehive has been in the region now for about 6 years. Launched back in 2014 at a time when fintech was pretty big around the world, but I've got to say, back in those days, the UAE and generally the Middle East had not heard of what fintech was in the slightest. So we launched basically, not even cutting edge, I'd say we were bleeding edge at the time when we launched back here. And then what we're really doing is basically we're a peer-to-peer lender. So all we're really doing is helping put together investors looking to lend and make a return with SMEs who are looking to basically get cheap and fast finance. And same problems here exist all over the world. SMEs always struggle to get finance. So Beehive was really established to do that, together effectively.
Yeah, now I got to make sure you understand, everyone, that when we say fintech, this is one of the most dynamic, most explosive space out there. Beehive being in fintech really puts you at one of those leader spaces, but it means you have to be highly competitive. What does Beehive do to set themselves ahead of everyone else?
Yeah, so I think it depends how everyone understands what goes on in this region, because effectively you'll find the banks in this region, and there are a lot of banks basically. The banks in this region are very good at doing certain things. They're very good at doing big corporate lending, and they're very good at doing retail lending. Where they always struggle, and this is again the same around the world, is that SME space. So is SME a division in itself? Is it retail plus, or is it corporate light? And what you find is a lot of the, because in this region there's really limited data. So in the US or the UK, you plug straight into one of the good credit bureaus, and straight away I'd be able to basically tell whether or not I should be lending money to you, Ken, or whether your business I should be lending money to. Yeah, very, very easily. The information here just doesn't exist. But there are credit bureaus, but they're reasonably nascent. So it's all about how ultimately can you quickly and efficiently credit assess a business so that you can lend money to it safely. And that's really, I guess, where our real secret sauce is.
You keep on saying the word lending. I need to make sure people understand lending is radically different than investing. So you're different than a venture capitalist.
Yeah, definitely. So if you think about crowdfunding, you have two main arms to crowdfunding. You have the equity crowdfunding and you have the lending crowdfunding. So we purely do lending. So if you're an investor, basically you are one of a number of people lending anywhere between, say, $30 and $100,000 to basically businesses.
And tell us about your joint venture that you're doing with Saudi Arabia.
Yeah, very, very interesting. So basically, it's been about 2 years in the making, and we're actually very proud to announce last week, basically, that finally we launched what is basically completely unique to this region, whereby we are now working directly and partnering with Gulf International Bank in Saudi, and also with the Social Development Bank in Saudi as well. Basically spearheading a digital revolution for SME financing in Saudi Arabia. And really it's been a massive job, but we're very proud basically to be launching that. And just so you understand how that works, effectively in the UAE or in just general peer-to-peer lending, you'd find you've got, let's say the peer-to-peer lenders, ourselves Beehive, and then you've got the investors and you've got the SMEs. What we're doing here is effectively we're the technology provider to GIB, helping getting money directly to the SMEs. But rather than the money coming just from investors, basically the money comes from GIB's own balance sheet, but also the Saudi Social Development Bank's balance sheet as well. His mandate is to get money out to SMEs, but it doesn't have this distribution platform. We basically are an enabler to ensure that the big money that's sitting here gets to the people who actually need it efficiently and quickly.
So throughout this whole session, everyone, we're going to be doing polls, and these polls really give us an insight of what's going on with you, but also so you could understand who's hanging out with us in this audience. So let's get going with one of our first polls, and it's all around how accessible is alternative funding models. So let's launch that poll. Let's get you in that poll voting space. Could we execute? There you go. So there's a vote poll if you can. Click right there. You can see how accessible are alternative models such as crowdfunding and STOs to you in the small medium enterprise space. So why don't you vote on that, and then what we'll do is we'll share the results. Peter, I appreciate you hanging out with us. I'm looking forward to seeing you at our big event that's happening at end of October. Of course, we will physical distance while we're there, not social distance, but physical distance. Peter, people want to find out more about Beehive. Where do they go?
So basically, go to our website, www.beehive.ae. You can find out a lot more information there. That's the easy way of doing it. Or just get in contact with me directly. You'll find me very easy on LinkedIn.
Yeah, I love hearing that LinkedIn thing because I'm shocked. I was just in South Africa recently, and they don't see LinkedIn as being a powerful tool. I think it's one of the most amazing tools. Ever since Microsoft took it over, it really has transformed even more, don't you think?
No, I agree. I think it's phenomenal. The amount of leads you get here. It's funny being in the Middle East. The region, the way things work here is it's very, very, very easy normally to get a meeting, but maybe it's a little bit harder to convert the meeting, as opposed to maybe in the West where it's pretty hard to get in that front door. Once you're in that front door, you can basically, you've got a higher chance of converting. LinkedIn is a great tool for this region, basically, particularly given what's going on right now with the lack of travel as well.
Well, Peter, thank you so much. Here, let's share those results real quick so you can get an idea. Once you vote, we'll share the results so you can see what those numbers are. Accessibility, but not enough awareness. That's what 78% of you said. So it gives you an idea what a vote looks like. For example, let's do another quick poll. And the poll is, where are you located? Where are you right now while you're watching that? Let's launch that next poll. Peter, thank you so much for hanging out with us. And I'm looking forward to seeing you in October. Thank you so much. So let's do this. Let's launch into our panel today, our panel discussion, and we're going to be focusing on what's going on with P2P crowdfunding and where the opportunities are. And I'd like to bring up our panelists. Could we please bring up our incredible panel? And I would like our panelists to introduce themselves. So could we bring, there we go. Hey, Marcus, how are you?
Hi, Peter. I'm great today. Very nice being here. It's an honor.
I don't get to be Peter. Peter was in the nice warm part. I'm Ken. But that's okay. So Marcus, do me a favor. I like this term called speed to cool. Speed to cool. And all that is I want you to tell us who you are, what you do, and what makes you cool.
All right. So I'm a adventure hippie capitalist. So what that means is I travel around the world on my motorcycle mostly. I live in tribes as well as going to well-developed regions. I try to look for what can help all of humanity. I'm still stuck in my hippie roots. And what I'm doing here is I'm trying to democratize the funding scene by enabling the crowd to participate and not only the VCs and the banks.
That's pretty good. You did a good job. And you want to talk real quick about your company?
So Funded by Me was started 10 years ago. It's a Swedish company. We are present all over the world now. We tend to go into regions a little bit later than the first companies because we want to have regulations in place. So I kind of started looking at Dubai in 2007 when I arrived on my motorcycle to see what we could do there. And it wasn't until later that the startup scene was ready and the regulators were ready to kind of bring some kind of regulations into place. So we helped shape those regulations for the equity crowdfunding side. And we were also the first fully authorized player in the Middle East.
That's great. Where did you ride your bike from? Where were you? You said you rode your motorcycle into UAE. Where are you riding from?
I guess technically from Sweden that time.
You went from Sweden to UAE?
Yes. Well, I'm still driving around all over the world. So I think Afghanistan during the war was pretty gnarly. Yemen during the war was pretty interesting. And tribal areas in Africa are among my favorites. But all over the place it's very interesting.
Wow, I'm looking forward to hanging out with you in October at the Blockchain Summit. Let's go real quick. I'm going to share the vote on where everyone is from. The poll shows most of us, of course, are from the Middle East. That's where we are. So you could see Middle East and then Far East and China, and then it looks like India subcontinent. So it gives you an idea, a very diverse crowd. Let's bring our next panelist on. Our next panelist, Mikhail. There you are.
Yes. Hi.
Okay. You know what your job is, right? Who are you? What do you do? And what makes you cool? It's going to be a tough one because Marcus, man, he set the bar pretty high.
But I think what Marcus was not doing, he was not tracing the funds behind the recent Twitter hack that happened last week. Well, I'm not sure if you heard that there was, Jeff Bezos and Gates, and of course the funds. So the Twitter has been hacked. It has been Twitter that has been hacked, not Bitcoin. So last week, together with the team, we have been tracing those funds and we have been releasing the story on Forbes. So I'm the Forbes contributor. And I technically, here you can see the story that has been released, and it's every time my pleasure to combine fintech with travel. So every time when there is a possibility for me to go somewhere and bring the knowledge, and there is a need to connect the different parts of the ecosystems, and I'm there. I think I travel to maybe not as exotic as Marcos, but to the Malaysian regulator to the Singaporean regulator, and I helped to create fintech companies into what 11 different countries on 3 different continents, and I'm 33. So it has been a fun ride so far.
It's pretty impressive. When you go to KL, do you do durian? Do you eat durian?
I am every time that you are being asked to do that, and everybody looks at you saying that you're supposed to like it and enjoy it. There are those different dishes that you have to grow up with, but I definitely try not to take durian with me back on the plane. So you have to like that.
You do it. Okay. All right. Hey, by the way, thank you so much for tracking that. By the way, also, that was an inside job, wasn't it? The Twitter hack was kind of it wasn't as much as a hack as we thought, right?
Correct. Plus, you have to ask yourself, when all of the different Twitter accounts have been hacked, why the Twitter account from Donald Trump has not been hacked. But that's, of course, a different session that we can be having on that.
Wait a second. So are you saying Donald Trump hasn't been hacked, but how about Kanye West? Because there's some crazy stuff that's coming out on his Twitter. So maybe that one is hacked. I don't know. I'm just saying.
It's easy to claim that somebody hacked it, but it's a little bit more tricky to follow the funds and crypto on a later stage. Yes.
Well, it's great to have you here. And we're going to be touching upon the whole idea, let's call it like Kickstarter 2.0, okay, when it comes to P2P lending and going in that space. So stick around. Can we go to Sam? Is Sam around? Are we able to see him? Sam! There he is.
Hey,
hi, Sam.
how are you?
Are you ready for the speed to cool?
Sure, yeah.
Okay, tell us who you are. What are you doing? What makes you cool?
Okay. Right. Well, I'm Sam Lee. I'm the founder and CEO of Constreet Partners. We are the AI-powered global decentralized investment bank and also a professional firm of fintech and digital asset space. So I back in the .com days, I literally lead the team to launch the world's first mobile wallet.
Wow.
Because back then now we talk about 5G, right? Back then it's 3G. I was working with this telecom company in Hong Kong called PCCW, right? Because Hong Kong is such a small market, it's great for telecommunication companies to do their pilot and deploy like new services. So we were working with Nokia, if you still remember this company. Well, now they're around. They were gone for some time, and now they're back. Eh? Back then they were huge. So we launched the world's first 3G network with a mobile e-wallet on it. So now we of course talk about, well, back then it's not crypto wallet, it's server-side wallet. But I'm glad to see, like after 20 years, now this payment on the phone is really taking off.
It's funny you said Nokia, because most of my friends that worked at Nokia now work at Supercell, and they make Clash of Clans. So big switch over, right? So the time then when you created the first wallet compared to now, that space has changed a lot, hasn't it?
Oh, absolutely. At the time, of course, like this, the word cloud is not even exist. So it's not cloud-based wallet. Cloud-based wallet is just server-side wallet, right?
Yeah, that's true. Remember when it came out first, it was called the Edge. It wasn't even called the cloud. It was the Edge, then the cloud, and now we expect it to be the cloud. You don't even use the word cloud.
Yeah, and I'm not sure if anyone will still remember this like word PDA before the smartphone.
Yep, PDA, personal data assistant. Of course, I do remember that. It's true. Right. Well,
but it's interesting. What I want to share is after the .com, after all this year, now we are seeing really this, I would say, the second big wave. After all this year, never felt such a big momentum as of now with the blockchain. It's really exciting.
It's very, very exciting. And it's exciting to have all of you on this panel. And let's dive into this whole conversation. Can we bring everybody up? I'd like to see everybody there. Okay, first, let's just talk about this whole transformation that's happened in the whole crowdfunding space, because the word crowdfunding, when we think of it, we think of like an Indiegogo or a Kickstarter or something like that. We're not looking at that space anymore. It is different, isn't it? How would somebody describe this whole new concept of funding? Who wants to grab that one?
All right, I'll start with that one then. An easy one.
Go for it, Marcus.
So for me, it's all about bringing it away from single actors like a bank or a VC that has to give a lot of money, for example, to a company, either as a loan or as an investment. So we also started off doing some reward-based products. We do some of those projects now during Corona just to kind of help out. But really, for us, it's all about the equity side and to some extent the lending side. However, lending is Peter's domain here. So we have that in Malaysia and some other regions. In the MENA region, we do equity. So that means if you want to have funding for your company, you come to us and we take that to the crowd, as in everyone. Everyone can come onto our platform, look at these projects and say, hey, I can't do $100,000, I can't do $10 million, I can do $5,000 or $1,000 or 1,000 dirhams. So I'll put that into the project that I believe in or that I feel is going to do the best with my money from whatever perspective I have. So that is the crowd for me in comparison to just a few actors controlling the market.
Makes sense, but make sure everyone understands equity crowdfunding is different than traditional crowdfunding where, again, Kickstarter, Indiegogo have gone, where you're getting an opportunity to get that product. You're able to have an advanced order of that product before you receive it. You're doing equity crowdfunding where people are getting a percentage as if they would own a stock in the company, correct?
Exactly. It's exactly like that. So you buy equity. We are working on secondary markets and such so that we will actually provide a stock market. That ties into what we'll talk about later on with STOs and securitized tokens, which is just a derivative, just like the equity in a company, as you say. And yes, with us, you buy a share in that company directly.
But you have so much different regulation. I think Peter said, we watch a market secondary. We watch it, we're not the first to move in. And I think that might be think about Apple, by the way. Apple is not the first mover in most aspects. They're the second, and then they dominate a market. So how do you deal then with all of the different laws and regulations across the world?
That is a huge issue. That's one of the reasons that we came into the Middle East or the Dubai region a little bit later than some of our competitors. There was at least one competitor before us. We did not want to come in. For us, trust is incredibly important. It's incredibly important that retail investors, as in normal people, will get money out of their investments, not just something else. So it's important for us to be able to be regulated. So we come in to help shape the regulations in the countries where we're active. So we've done that in Malaysia, Singapore, to some extent, Philippines will come out soon. I see that we have some of these congressmen from the Philippines watching this. And there's also what we did in Dubai with this. So it's incredibly difficult, and we have to have regulations adapted to that specific market, which kind of to a large extent when it comes to the Middle East, for example, is based on the FCA, the British law, rather than the American or any other law. So that means we need to have a license to operate in each country or each jurisdiction.
Wow.
We try to get around that with these called tokens. So as a security token, so we take the equity, we turn that into a digitized form, but that is also regulated. We just have to make sure that we're tying into all these regions in a way that works.
So let me grab a question. This one's coming from Scott, who's in Ottawa, Canada. And Scott is asking a question: how do we see the evolution of NFTs in the fundraising world? So I'd love to hear, you want to try that one, Sam?
Well, okay. So for the audience benefit, so NFT stand for non-fungible tokens, right? So if you have any experience with the tokens, for example, with the utility token states, all the tokens are identical, right? They're all tradable, like even security tokens, like the basic design is every token is identical. But NFT, the token is unique, right? So you can think of it almost like a collectible. So there's some trial case now in Europe, companies developing NFT tokens based on a sports star, some of those sport cards. So I think it could be an interesting concept because like we can then use this NFT token to be represented as ownership of some unique collectible items such as artwork, right? Maybe a bottle of collectible red wine or something like that.
So we're not seeing this in the funding space. I do want to touch upon funding before we go in that direction. And this is where I want to go. I've launched probably about 200 different companies. And every one of them, I went through a general process to fund that company. It was sweat equity from myself, then it was friends and family. Then I went to an angel investor. If it prevailed and it was a decent company, I would go to a venture capitalist. I would receive so much funding from a venture capitalist. They would take generally 30% of the equity. And then I would go through a process of, if it was going to get bigger, I would go to a family office where I would get more money. Then I would probably do maybe an investment banker and then a hedge fund, and I would take it public. So that whole succession would traditionally happen if the company was going to grow. Has that funding pathway that I identified, has that changed much over, I've been doing that for almost 2 decades. Has it changed much? What do you think, Mikhail?
Definitely it did. So we have seen the first shift after 2000, after the first world financial crisis, like the recent one, 2009, 2010, where actually VCs have pulled back out of the early stage funding. So it made things even more complicated, because then back in the older days, you still could approach VCs for like Series A, maybe not pre-seed funding, but seed funding and continues. This was exactly the time period where actually Funded by Me has been created, as I recall, because then suddenly you create this vacuum, and then this vacuum can be closed with equity crowdfunding. So yes, the process has changed. Now, according to the recent studies, equity crowdfunding is larger than VC. So crowdfunding as such is larger than VC funds, because they remained quite stable throughout the time period, but then crowdfunding has been growing. But every time when I use this example, then individuals look at me saying, this just can't be true. It's impossible. They cannot be larger than VC funds, because we as VCs, we have been doing this for the last 30 years, and you have no clue. I can tell you how to do that. I think this mentality is still the same mentality. But as we went more digital and we suddenly have the possibilities to get the funds from abroad, this has not been a problem, and VCs rather stay locally or regionally, as you know. So then nothing changed in the VC world potentially.
Although to add to that, it does actually depend on the region. So for example, if you look at the Middle East right now, here things like equity crowdfunding is much more nascent, and the VCs are still pretty prevalent getting in at pre-seed and seed as well, much further behind than the US machine type thing, but it does depend where in the world you are as to how much changing. So, for example, if you were in the UAE right now, the chances are your route to finance wouldn't be dissimilar to these you explained.
And then, Peter, you're absolutely correct. There's even something what is called, I think, home bias. And home bias means that it's very important where you are actually applying for the funds. So once you are incorporated in Stockholm, then the first VCs or business angels or whatever type of funds you have been applying for, they actually have been coming from Stockholm as well. And this pathway has been following with crowdfunding. So even though we moved this process to be more digital, it's still very important where you are currently located, because then the investors who are the closest to you geographically know you the best. So there has been this recent. So
tell me where the crowdfunding side comes from. Again, first, it's sweat equity. My idea, I'm putting in my time. It looks like it's a viable business idea. Next, I go to friends or family. That's where I go to my, literally my parents or my great friends, and they say, hey, put in some money here. Where does crowdfunding come along? Because then I would generally go to an angel investor.
All of the processes, because then you have to think about crowdfunding more like vegetables. So we have 11 different subsections of crowdfunding. You have donation-based, you have reward-based, you have equity, you have lending, you have larger chunks of crowdfunding. And depending where you are in the process, of course, you can apply for different types of crowdfunding. There is a possibility for you to go first on Kickstarter, then to go to Funded by Me, then when you have a track record, then to go to Beehive. So it's an alternative process that you can be using, but it is clear as well that all of the different types of investors in crowdfunding, they are different in terms of age, different age groups for Kickstarter, different age groups at Funded by Me, different age groups at Beehive, and they are very different. So they don't interact because, depending on the type of loan or the size, you need a little bit of different expertise as well.
One of my closest friends, a guy named Elan Lee, had one of the most successful Kickstarters ever. He had a product called Exploding Kittens. He said he's going to raise $10,000. He ended up raising $9 million. But he knew he was going to do a great raise because he gamified the process of crowdfunding. He knew where to actually put in the different triggers to get people more excited. In today's equity crowdfunding space, can you do the same type of gamification to get people excited, or is it a different type of process? Come on, guys, get excited about this. Who wants to answer that?
Well, for the crowdfunding, so maybe I share a little bit from the token point of view, right? Because I focus a lot on digital asset and the tokens. Well, crowdfunding can exist, you know, because it's already going on for years, right? It can exist without the blockchain and the tokens. But what happened with the blockchain and the token, it just become a steroid, right? Take it to a different level because of decentralization, right? You think about it now, if you do crowdfunding, you go to a crowdfunding platform. But in the future, every company actually now, right, people can do crowdfunding based on the tokens, and the tokens can be tradable, is decentralized. You don't need a centralized crowdfunding platform, right? The company itself, they can offer a token sell. I would think for the earlier projects, they can use what we call the utility token crowdfunding. It's almost like a concept because of funding a product concept with a utility token that with a future entitlement to goods and services, right? But at a later stage, then we can bring in what Marcus mentioned about the security tokens. There are two different types, right? Utility tokens is almost like a coupon. It's more like the traditional crowdfunding. You purchase a product because you want to support it, and then you get the product later. So that's utility tokens.
But, and Sam, what you said was it's like putting it on steroids. It's almost like, and I hate to go back only 2 years ago, it seems like a long time ago, like the ICOs of the world. When we did ICOs, those were those steroids that got people excited. Peter, you were going to say something on that. Can you jump in real quick?
Yeah, your point on gamification. I know when we started, obviously betting, for example, is not allowed here in the Middle East. So one of the things we did basically, which is also actually what you find a lot of the debt crowdfunders in the UK and the US as well, is when an initial request went live, it was like, you can get a 14% return, for example. And what you'd find is basically you fill that to 14%. And then the next person would go, but I still want to be in. I'll go in at 13.9 and I'll knock out that person at 14. And then you start a spiral down effect. And it was amazing because basically our requests were open for 14 days and all the bids happened either pretty much on the first 10 minutes or the last 30 minutes of every single bid. And it was definitely around the whole concept of gamification because people were literally trying to bid, outbid right up to the very last second. We've now changed that process because ultimately it's not something that's scalable. But the whole gamification process is definitely there.
So it's possible, but it is different than the Kickstarters, Indiegogos type of gamification.
Totally.
I think it's an incredibly interesting part, but I also think it's important to see, for example, Funded by Me is not a crowdfunding company in the MENA region. Funded by Me MENA is a financial institute with a crowdfunding branch or an arm. So we need to kind of build the ecosystem. I think what, for example, CoinStreet is no longer a crypto company. They are a financial institute of sorts. Beehive is leading the way now into Saudi, showing that we can work together with the legacy financial institutes. All of this, if we build that ecosystem together and really bring that forth, I think we will see that people want to have the trust that you get from government regulation and from legacy financial institutes, coupled with the innovation that is coming out of companies like ours. And gamification is absolutely something there. We're trying to use gamification more to get people to understand and really go through the companies. Because crowdfunding has had issues in the past, or still has issues, where due diligence is not made on the same level that a VC can do. Like, there are basically no equity crowdfunding companies in the world turning a profit. And that is not even doing proper due diligence. So we're kind of looking towards the people who are investing to do their own due diligence, which is not possible. So we have to find a way to either kind of gamify that aspect so people come in, participate, to do proper due diligence, helping each other out, or work together with legacy VCs and all this to provide proper projects. And that's kind of what I want to do. I'm trying to build a system where we are doing proper due diligence, but we're offering that to lenders, to banks, to VCs, and we're hoping that they're going to come to us and say, hey, we're trying to raise $1 million for this company. We want to put in $150,000. The government will put in $150,000. The bank will lend $150,000. And then I can turn around and say, hey, you retail and regular investors, as well as high net worth individuals, would you like to participate in this, knowing that all these people are already on board, have done the proper due diligence, and here's all the material for you. So gamification.
So you create a syndicate.
Thing.
Yeah.
So Marcus, you're creating a syndicate then for that investment, whatever that is. You don't have a lump sum of money that's sitting there that you individually, like a fund manager, would invest to. You're doing project by project, correct?
That is correct. We are building funds as well as a side, but we're not big enough to launch that. There's so many different things that we can do to try to reduce the risk for the investor, which is, for me, one of the biggest things that needs to be done in this sphere. Because if you invest your money in a company and then a second one and you lose your money all the time, which, to be honest, is what's been going on in the equity crowdfunding scene. I mean, we've been raising money for some unicorns and some companies that do really well. But if you look all over this industry, most people lose their money. And if you keep losing your money, you're not going to come back and invest again. So we're in effect killing ourselves. So I don't want to do that. I want to have my reputation to continue to be stellar, and I want the company's reputation to be stellar, and I want the investors to be happy.
Super important. Let's do another poll real quick. Let's talk about this crowdfunding and peer-to-peer lending and the benefits. Let's launch that poll. Can we do that? And while that poll's going on, again, this is all around the allocation of more capital. Please vote on that. This is the Future Blockchain Summit. We are doing these mini breakout sessions because, of course, the end of October 26th, 27th, 28th, we will be in Dubai discussing all of these topics plus a lot more. The panelists that you see will be joining us in a physical distancing opportunity in Dubai the end of October. So if you have questions and we don't touch upon your question, we, of course, will answer those when we are all sharing time in Dubai. Since this is a blockchain summit, let's talk about the idea of how blockchain fits into this. When we first did our very, very first virtual event, we identified that the word blockchain has not been marketed or evangelized properly. Sure, a niche world gets it, but the rest of the world doesn't understand its value. So gentlemen, I'd like you to help us understand how blockchain makes the whole lending or peer-to-peer space sound more tangible or more exciting. How does blockchain accelerate this or enhance this? I will go right to Peter. You want to try it?
Yeah, certainly. So I think you'll find actually the blockchain and peer-to-peer actually quite often don't work currently together. But that's not to say they can't work together. And I think where you'll find blockchain in particular is really useful is where effectively you're trying to tie in something. Like blockchain, for example, will be a great tool, as I think we all know, for trade finance, following a product from A to B. And A to B also includes the fact that there'll be an invoice, a purchase order, the fact that the goods arrived, etc. Now, where peer-to-peer effectively is good at, and one of the things we do a lot of, is ultimately working around that financing of that invoice. And ultimately, if you know that basically you can use blockchain to ensure that this invoice is valid, that the payment has occurred, that basically the goods have left the warehouse and have gone to the customer has received those goods, all of that is validated. That basically de-risks massively the chance that you're basically going to be lending to someone and that money will then come back finally. So I think in my mind, that's where actually blockchain and peer-to-peer or any sort of lending can really, really...
They work together. It's where they're symbiotic is what you're saying. Mikael.
It would make sense to have like very tangible examples as well to build on what Peter has been saying. And we have like a Kickstarter 2.0, which is called, I think, Pledge Camp. So it has been created based on the former executives from Kickstarter who, a little bit to build on what Marcus has been saying, they have first collected all of the different challenges that we have in crowdfunding. Like 85% of the crowdfunding and entrepreneurs have been delivering late, or 14% have not been delivering at all. Of course, in reflecting on reward-based crowdfunding like Kickstarter, not equity-based. And then how blockchain comes in, I can just give two very short examples. One, it is possible for the different backers to just send in the money to the platform. This is being tokenized. And there's like a smart contract, and then the entrepreneur is dividing the delivery phases into like 3 or 4 different phases. So they promise to do something, and every time when they can prove that they have been delivering something, there is like a second or third or fourth wave of the funds which are being released to the entrepreneur. And this makes sense because at the current stage, 90% of the crowdfunding platforms do not feel responsible in case things are not working out. And then when you ask them, okay, what in case they do not pay back, or what happens in case the project goes into bankruptcy, they more or less act, as mentioned, as a little bit like a Tinder. They bring like two different parties together, but in case this didn't really work out, Tinder is not really responsible. So this has been one case that worked with the Pledge Camp, and there was another one because. Back in my dark days, when I worked for 2 of the companies that have been crowdfunded, imagine that you have 500 investors that have been investing into your company. And of course, they have questions. They have the right to send you an email and ask, hey, what about, but once you have 500 investors, and then they send you like an email a year, then you have 500 emails a year that you have to answer on a daily basis. What is a kind of tricky. And blockchain can help us to create SPVs, to put them into particular setups to just answer things directly, as well as there is a trick with once I invested into something in equity crowdfunding and I would like to sell it to you, Ken, then of course you have to go to the Swedish companies registry office. I have to get your passport. This has to be scanned and sent in. And here we have the technology from a blockchain perspective. So technically the technology is already there. What is not there is, this is what we have been discussing with Sam before the show, the regulation is not there yet. So we are a little bit in the modern time period of the internet and blockchain. So we have the technology to make all of the ledgers blockchain based, but we don't have the regulation yet. So sorry for this very, very long explanation and those different examples.
No, but that's important. But we also don't have is the trust and transparency. We've had problems with this in the past on the trust and transparency. So where do you see, Marcus, trust and transparency being placed on this till we're feeling safe and we can actually see where things are going?
I think this is a huge topic. Firstly, I just want to say that blockchain has become like a buzzword. Everyone wants to do blockchain for whatever.
Everyone.
So for me, there are 3 things in a blockchain. There's distributed storage, there's smart contracts, and then there are the rules for creating what's called a block, or the chain of information. So if I create my own blockchain, how many users am I going to have? How distributed will that storage be? Because it needs to be millions of people that have a ledger that has the records of what's going on, that's updated continuously. If there's 10 people, I'll just call 6 of those and say, hey, let's fake it, let's change it. And then the entire thing falls. Also, if you're not going to do contracts, like for example, there are many applications that are using blockchain for some unknown reason, but they don't do smart contracts, and you don't need it. So if you don't have those 3 things, don't have blockchain. So for us, I think it's super important. I think Michael is absolutely right when it comes to transparency, but also the escrow part. So if you build a house in Dubai or anywhere in the world, you can do escrow. You put money into an account, that account is controlled by the bank. So if you put money into any project that has been funded by our company, that gets put into an account that we cannot access. The entrepreneur cannot access it. It's held by lawyers in the UK. So they have it, and then we disperse that money out to the entrepreneurs at set times, just like Michael is saying. I think that's super important. Then I think what Peter is doing, tying up to governments and banks, is also super important. That will lend legitimacy and usage and all of this, and make it more easy for the clients to access and understand and believe in what we're doing. So I think that's super important, whether or not it's done through blockchain or not.
Just to top on that, The challenge is often, Marcus, what you know, of course, best yourself, is when you go to the regulator and then you say, hey, I do equity crowdfunding. Okay, that's difficult. I would like to do blockchain on top of that. Then the only thing what is missing is the music. There's like this na 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 na, and you see these long faces, you know, of those guys, those women look at you saying, okay, what do you mean? And that's a little bit tricky because we don't have the very good front runners on like that we could point out and say, hey, in those countries, they have done it very well. It feels like we're just not there yet. Maybe Sam is.
So here, Sam, yeah, I want to ask, I want to throw in a term, and I'm not sure if I'm about to take us on a course that will, I don't know where the direction is, but has DeFi changed anything?
Well, it's interesting you mentioned that, right? Because blockchain, you know, is very confusing. It can have two paths. One path is about decentralized application, which is the field of IT, right? When we talk about utility tokens, actually the field of IT represent a product. But the other side of blockchain is DeFi, is about the financial application, corporate finance, capital market. When we talk about security tokens, is related to the field of finance, right? So even when we talk about tokens, utility token and security token, completely different. They can both be used on crowdfunding in different aspects, right? If you use utility token on crowdfunding as entitlement of future product and service, but if you use security token on equity crowdfunding, is the benefit, economic benefit of the company, of the corporation, right? So the both can also be used together. You can have a hybrid.
But DeFi right now is probably the hottest space in the crypto market, is being in the DeFi space.
It is, exactly, because blockchain fundamental, the most effective is the solving the issue of trust, right? The issue of trust, because we know like internet solve all the delivery of information and data delivery, but the trust is most important for financial transaction. So that's why DeFi very naturally, they make very good use of the blockchain, solving issue of trust and also interoperability, right? When we do crowdfunding, we go to different platform, but think about it now, if the crowdfunding is based on a token, the token is decentralized and it will be the same token trading on different crowdfunding platform. It's interchangeable, right? So that's also bring into how DeFi is so popular.
Yeah, well, I think we're just looking at the very beginning of DeFi. I really do. I think that's probably the next big step. Guys, what really happened to the ICO market? Because that was one way of funding a lot of great startups. It's ironic that if you look at EOS, a friend of mine created EOS, well, one of the founders of it. It was the largest fundraiser out there for an ICO, and all of a sudden EOS is kind of like, no big deal anymore. What happened to ICOs, and how do we prevent the term ICO failure falling on top of peer-to-peer or blockchain peer-to-peer? What happened to ICOs? Why was there a huge crash?
Lack of trust and lack of responsibility. It's very easy.
That was it, right?
It is. Exactly as Sam has pointed out. It's very easy to say, okay, please invest $10 US into those amazing cups, and then they will be able to, download apple pies via Wi-Fi. We can claim whatever. And in case there's something what is called the signaling theory. Once you have graduated from particular schools, or you have different logo types on your LinkedIn, etc., then people tend to trust you more. Once you have a couple once you have a team with all of those signals, then you can go and claim, similar to you can when you say, oh, I have started 200 companies. When let's assume that a significant part of them have been successful. Once you reach out to the crowd and you say, I would like to create a 201st company, because you have been successful with the other 200. I'm like, okay, I can put my money into it. It's a little bit, the signals and the lack of responsibility and the international responsibility has been causing the challenges that we have been discovering. But even if we would like to fix those challenges, so above the regulators, there's the Financial Action Task Force. So I have been in one of those meetings hosted by the UN, where all of the global regulators are coming together. I don't think that there is a proper understanding of how this can be fixed, and often there might not be enough knowledge yet, how the knowledge transfers.
That's the issue.
To the regulator, because often the regulator...
Mikkel, real quick. I just want to make sure. Everything you're saying goes back to something you said earlier, trust and transparency. It's trust and transparency, and that's why moving forward, those are the two paramount things we have to have, are trust and transparency, period. Correct?
But how?
But, well, there you go. You guys are the smart ones. How do you do it? Peter, how are you going to do it?
So basically answering the second part of your last question, I think basically, which actually is the trust and transparency, is will crowdfunding, peer-to-peer, et cetera, go the way of ICOs? I think ultimately my general view is no, they won't. Mainly because you've got, what you're seeing is a lot of the crowdfunding and the peer-to-peer sites are either now very, very well established. I mean, for example, peer-to-peer has done something like $60 billion worth of transactions today. Obviously, as Mikhail said, basically equity crowdfunding has overtaken VC funding. Yes, there are a few charlatans in there, but ultimately they're generally the minority, exception of certain countries, maybe like China. So effectively what you have is that you've got to build a reasonably well matured ecosystem around peer-to-peer and equity crowdfunding. And there's a lot of regulation around that. I mean, we're regulated here in Dubai. We're regulated in Bahrain, in Saudi. Effectively, we're regulated under the bank. UK will be regulated. Regulation has to is that stamp. That stamp brings trust basically with it. And that's the critical part, I think.
I think you're spot on. And what happened was kind of FOMO, it's a fear of missing out. So people saw these ICOs, they saw some of these coins creating, especially like Bitcoin and the big ones, even DAO, creating these billionaires around the world, and they want to be part of that. So I can throw a little bit of money in, and that, like we said, it's gaming, right? It's rigged gaming. Personally, I never liked the ICOs. I do believe there's a place for them, but just like Peter is saying, we need to be regulated. We need to help the regulators, like Mikhail is also saying, and Sam is saying, help them understand what this technology can do and move forward. I think the UAE has actually taken great strides, as well as Bahrain and now Saudi and pretty much the entire Gulf region is trying to understand and getting professionals in to help with this. And I think that's great. I mean, it's hard for everyone to understand where this is going and how to do it. But to start off with having proper regulations, having a derivative such as a equity as the underlying asset, provide security. To be able to be, to come on our platform, you need to be registered. You need not to be, a criminal. And then we need to go through to make sure that you're not going to harm the investors. So basically, that's how we move forward. And hopefully people will forget about the ICO era eventually. And not, I don't know if it's like an STO thing, because token sounds like all these things have been happening. So it's unfortunate they kind of kidnapped the technology.
So you want to come up with a brand new term is what you want?
No, I want people to forget the old thing happened.
Just get rid of it. Hey, before we go to our closing points real quick, because this is what I want you gentlemen to think about. I want you to project yourself 2 years into the future, because I think 24 months is like it's 100 years in other industries, but 2 years in the future. And where do you see this marketplace? Think about that. Before we go to our closing statements, I want to remind everybody that, of course, the Future Blockchain Summit is happening the end of October. And if you want to go to the website and register, we hope to see you there. We will physical distance, but not social distance. And we'll share all this insight and wisdom from our great panels and speakers that will be joining us. This is a very, very exciting, important event to be at, okay? It's the end of October. But also remember, what we're doing here is in conjunction with the Fintech Surge, which is happening March 27th through the 30th of next year. So the first quarter of next year, make sure you're part of that at Dubai World Trade Center. Very excited. So let's go to the closing statements. 2 years, project yourself. Sam, tell me, 2 years from now, first, will your hair look just as good 2 years from now?
I would try, So 2 years, I tell you, we talk about a lot blockchain, right? I think 2 years from now, not too many people will talk about blockchain. It is not about blockchain. Yes. Because you think about it, blockchain is overhyped. It is a protocol, right? We watch video every day. Who knows about the H.264, MPEG 4, MPEG 2, right? We use internet every day. who knows about the protocol of internet TCP/IP, right? Blockchain is the protocol. It is about the application. It is not about MPEG 2, MPEG 4. It is about Netflix. It is not about the TCP/IP. It's about the web, right? So it's not about blockchain. It's the application, what we're going to do with the application.
I think it's very insightful. Great. I love that, Sam. Thank you so much. So let me go to Mikhail. Mikhail, people may not know this, but you, of course, if they joined us a little later, the Twitter hacks that we saw where people were giving money to Bill Gates and I forget who it was. It was like a crazy list of people whose accounts were hacked. You guys have been tracking that, which is pretty amazing. So 2 years from now, I want you to project where you see this industry going.
I'm convinced that somebody will finally wake up. So both the banks as well as their government authorities, which are providing funds for early stage entrepreneurs, and follow like the Danish and the UK example. In the Danish example, instead of the government just giving out money for some kind of an application, you had to raise the money on Kickstarter, and they have been like doubling the amount of money that you have been raising on Kickstarter. Because then this is some kind of a smart idea how to move this forward, and you have like a track record that somebody really would like to have your product. What a very smart way of moving forward and using public funds. Additionally, in the UK, and jumping more to lending, one of the public-owned banks have been financing or co-financing entrepreneurs that have been living in areas that had challenges to raise funds from the banks, or wanted to create restaurants or be hairdressers but didn't have the experience or the education in it, and they have been lending out money with the help of crowd lending. Peter will know more about that. So this has been super successful. The bank actually made money. So thinking about COVID-19 and all of the effects that we still don't know, this is the time period for us to just rethink how the financial ecosystem has been done. Why can we just not use the fintech companies that we have to just use the funding? And I'm convinced that by 2022, suddenly somebody will be like, okay, this has been a smart idea. Why have we not been using that? Why do you think? So I just keep the fingers crossed that this will work.
You know what? You said COVID-19. You're the first to even say it. I thought for a second we were out of it. We didn't even talk about it, but I guess we're back there again. Marcus, we learned that you have ridden your motorcycle all over the planet, which blows my mind. I love hearing that. I've been to 140 countries, and the only 2 words I've learned in travel, and my favorite 2 words in travel, are Ritz-Carlton. My favorite words. It doesn't sound like that's the way you travel, but give us your 2-year projection.
Well, obviously, I agree with Sam completely. I think that's going to disappear. I also agree completely with Mikhail. We are doing that in Malaysia. We have the government stepping up saying, and have been for over a year, they're lending a certain amount of the money, or they invest a certain amount of money. We find the rest with the crowd. And then what are we going to do in 2 years? Well, I think everyone on the panel, we're already planning for that. I think we have pretty strong ideas where we're going. Unfortunately, a lot of us cannot really even share what's going to happen in the next 2 weeks. It's a little bit too much hush-hush, and it's, as you say, it's a super fast evolving industry. The backstage conversations have been very interesting, and I think will continue to be. But I do think exactly what you're saying, transparency and trust. So we're going to have to tie up with some kind of ecosystem or syndicate or something that provides transparency and trust for users. And I think that is what you're going to see in the coming 2 years.
Thank you very much, Marcus. And then Peter, you get the last closing statement. When we started our conversation earlier in this webinar, we brought up the term that you are fintech. You want to be known inside that fintech space. It's a very, very fast growing space. It's got a lot of trust actually in that space too. But being pigeonholed in that fintech, do you feel that it's going to make it difficult for you to be seen as somebody that's using advanced technologies like blockchain? Or just give us an idea where you see the next 2 years.
No, not at all. I think ultimately, particularly here in the Middle East, I mean, in fintech, is a word that basically everyone is doing now. All the banks basically are trying to hire their new chief digital officer, new strategy officer, all digitalization. The banks here are very focused on digitalization. The importance is whether they're trying to wallpaper digitalization, so i.e. it's literally what you as the end user see, or they're actually really going to do it properly and actually digitize the back end as well. And that's really where businesses like ourselves, like Funded by Me, can actually really help out, because we've developed those processes. That's why we're working with GIB in Saudi. And I think, expanding upon what Marcus and Mikhail said, I can see the same thing as well. I think ultimately the banks and government will ultimately realize that businesses like us are distribution platforms. We're basically the ability to go from A to B very quickly. These are businesses which are great at lending out big sums of money, but they're not good at lending out smaller sums of money. And I'm still talking reasonable chunks. I'm talking like $300,000 per business. It's a decent amount of lending. The banks and government entities in particular are just not set up for that. But that's where the money needs to get to. So where I see things over the next 2 years, I think is more collaboration. But if I'm honest, I can see it more towards month 13 to 24 than month 1 to 12. I think there's still a lot of internalization processing going on with banks here and also with government as well.
Well, I can predict 3 months in the future. And 3 months in the future, we'll be in Dubai. That's where we'll be. We'll be just finishing up our Future Blockchain Summit, which you will see all these incredible panelists, plus the ones we've had on the last virtual sessions, and more to come. So we have a couple more virtual sessions before the big event that's happening in October. I want to thank all of our panelists. Plus, I want to make sure the Fintech Surge event that's happening in March, you go on and register for it, because again, that is an in-person event. Let's get back to sharing time with one another. Panelists, thank you so much for sharing time with us and being with us. Nisha and Oliver, thank you for bringing us together. And everyone, thank you very much for being part of the Future Blockchain Summit. We'll see you all later. Thank you, everyone. Bye.
Thank you so much. Thank you.
Bye, everyone.